On Equity Access, your area perspective of stock market developments and of developments of the Zimbabwean economy. Thank you for joining us as it broadcasts live from Hampton Studios in Harare. I'm Ibn Mabunda. Let's get started. Headline: inflation continues to soar, coming in at 175% in the month of June. This is up from the last month's figure, which came in at 97%. This, of course, is according to the latest figures released by Zimstats early this morning. On a month-on-month basis, inflation increased from 12.54% in the month of May to 39.26% in the month of June, which is a 213% jump. The surge was largely driven by food inflation, which jumped 251.10 CPI points from 126.30 points in the previous month. Transport inflation also went up 106.60 CPI points to 123.80 CPI points. Earlier in March, the central bank governor, Dr. John Mangunjika, did indicate that he expected inflation to come down to as low as 10%. Meanwhile, the IMF insisted on inflation coming down to 40%. But with what's playing out, it remains to be seen how the story actually develops. Now, let's just get into the stats for further perspective to look at the trends where in terms of where Zimbabwe is actually coming from, moving right up to this particular point. And of course, as you can see from the graph there, playing a significant role there is actually your bread and your cereals, and then right at the top there, alcoholic beverages, as well as your tobacco, non-food right at the bottom. And of course, as I did indicate, the projections going forward, Equity Access has projected an inflation at the end of the year of over 87%, while the IMF has projected inflation of 40%, against of course what the minister as well as the central bank governor have indicated, that inflation should come down in the last quarter. Well, on that particular subject, we engaged an economist who is as well the chief executive of the Zimbabwe National Chamber of Commerce, Mr. Chris Mugaga. Let's have a look at his perspective with regards to this inflation as well as other issues in that same bracket. Let's have a look.
The cost of doing business right now has risen so significantly if you compare to any time last year. You look at the inflation rate at almost 175%, which is a confirmation that the whole dream of government thinking of having inflation rate be with a one single digit by December is just but a hollow dream. Inflation remains a threat, possibly by year end. Others are putting the rate at about 400% by December. So threats are there in the economy, threats are there in the business environment, and we believe the government has got the toolbox somehow to deal with this challenge.
Now, there's been a lot of clamoring on the part of private sector to have it involved where policy formulation is concerned. Do you think that government would perhaps heed to that call?
Obviously, we are always involved. It's a case of just maybe making policies without further consultation like the SI 142. But obviously, if you ask, I will tell you we continue engaging government in a number of areas regarding policy making in this country. Private sector in Zimbabwe is quite very robust. And I have every reason to believe that it can only improve, but we've been working well together for years.
I realize. Now, lastly, government did project a GDP growth of 3.1%. Do you think that is feasible?
Very impossible. I think you will see from what the minister presented today, 1% suboptimal growth. I think it's quite very difficult. You look at the figures, mining, agriculture, definitely they are not going to record a significant growth this year. So overall, I don't see a positive growth for 2019. It will be negative.
As power matters continue to grip the economy, the Minister of Energy and Power Development, Honorable Fortune Chesa, did call upon industry as well as the private sector to actually see to it that they meet their debt obligations to ZESA. He expressed that while the country is grappling with waning dam levels at Kariba, there were also other issues primarily to do with debt that were affecting the ability of ZESA to service the country where power is concerned. ZESA is owed a good $1.2 billion by private sector, individuals, government, as well as municipalities, while it owes its creditors $300 million. He spoke at the State of Industry meeting held in the capital this morning. Our Equity Access team was on the ground. Let's have a look.
You can't be importing power at such a huge cost and keep it away as 0 point something. It doesn't work. And we're waiting on that. A week, 2 weeks ago, we had an internal discussion, ZESA, ZERA, Ministry of Energy, to pull down the tariff so that we come up with something that is based on evidence, not just plucking figures from the sky and say, okay, the tariff should go up by so much. We want to understand the impacts on you. We want to understand the extent of cost reflectivity in the tariff. It must reflect our costs. Nobody is the sort of situation that ZESA is in. So if that is going to make you feel happier, the tariff is part of the problem. But you are part of the problem. You haven't been paid. I think we must be candid about these things. That's why I say that our issue is graduated. Our failure to plan for the situation at Kariba is a problem. Kariba is now at 24%. Don't expect miracles from me or from anyone. But what you should expect of me is to at least provide leadership in the development of a plan for energy for the country. And that's something that I'm working on. Madam Elibek, we need a tariff that reflects the costs of making power. It's really just as simple as that. There are provisions in the law that allow ZESA to come up with an arrangement, a tariff that is specific to particular circumstances. It could be mining, it could be anybody. And I'm going to be working on that to help develop that particular situation. I think I've answered.
Now let's get into a breakdown of who owes who where, of course, the tariffs are concerned, because the minister did take the time to actually shed light where that is concerned. Now, local authorities owe ZESA a whooping $359 million, broken down into the city of Harare, which owes ZESA $145 million, city of Bulawayo $112 million, Gweru $28 million, and of course Mutare there $2.4. Kariba also owing ZESA $4 million, despite the fact that this is where we actually have the Kariba Dam. Then of course the other municipalities at $67.6 million. Now to the rest of these players, the commercial players, they're owing ZESA $92 million, mining $69 million, farming $143 million, industry 94, parastatals 43, domestic users, you and I owe ZESA $257 million. Then of course the minister did shed light in terms of how ZESA will now be introducing new tariffs in a bid to bring sustainability to this particular entity. Again, let's have a look.
Pay what you ate already, isn't it? You don't need anybody to push you to do that. Pay what you ate already. And then let's talk about the new tariff. We're working on it. We can't, nobody will insist. None of you here will say, let me keep on paying zero for ZESA and expect power. It's not going to happen. So let's have that discussion, and I would like to carry industry and commerce with me, through you giving me your own views, detailed, based on evidence. If you don't do that, there will be a tariff. And don't blame me for it. There will be a movement in the tariff, but you need to be part of it, and you need to contribute and give a holistic approach to it. Yes, people are frustrated. Industry say you are frustrated. Your story, everyone hears the same story. That frustration must result in heightened interest in the power sector, in renewables. If you are just frustrated and say, our Rain Millers Association here were frustrated, our machines, when you stop them and then you have to start them, it's not going to take us anywhere. Let's do something that is practical. And I'm here to facilitate that. It's my job to make sure that we have continuous power. But when we don't pay, I will not stop talking about payments. When we don't pay, we are assuring ourselves of inconsistent supplies of power or no power at all. That's the reality. If you own people that you sell your products to don't pay, and you continue to entertain them, or continue to entertain them as the use of energy, so we can't push it. We must pay. pay. It's that simple. Managed by demand, kids. Otherwise,
In order to ensure that we succeed and we continue to grow, we are also diversifying our business model. We are going to start this year to provide.
Now, the Minister of Industry and Commerce issued a State of the Industry address in the capital this morning at an event that was attended by various players across the private sector. The minister called for increased production by private sector despite economic headwinds. He also urged industry to innovate and develop domestic solutions to the country's problems. During the event, the minister revised the manufacturing sector projections downward from a pre-stated 2.5% figure to just 1%, citing issues to do with the drought, the cyclone Idai, as well as power issues, among other concerns. We had a close-up with the minister to discuss these and other matters at his office in the capital this afternoon. Let's have a look.
Right, thank you for that. We came up with our projections for the 5 years late last year, where we still had projected 2.5%. But even then, indications were quite clear that we were going to have drought. So we had to be a bit conservative, which is why I said, let's have a uniform 2%, which I believe we will outdo by all means. But we needed something more realistic, something achievable, because every second quarter, every half year, we will be reviewing performance, and we want to take stock of what would have transpired and then make appropriate amendments wherever it's necessary. So this year, we have projected 1% because of the effects of drought, effects of cyclone Idai, and also looking at the challenges we are facing throughout the currency reform process. But I believe that we still stand a good chance of reaching close to 1.5% this year. And thereafter, we should even surpass 2%. 1 year, yes, this year our 2% is less likely we will reach. I don't believe we'll get to 2%. But my focus is that in 2020, we will surpass that. Overall, in our 5-year target, we are likely to surpass the 2% annual growth that we have set out.
I realize. Now,
right, thank you for that.
Now, earlier, the Minister of Finance, Professor Mthuli Ncube, did indicate the need for privatization of state-owned enterprises. Now, we engaged the Minister of Industry and Commerce on the progress where that is concerned. Of course, he did shed light on a couple of entities, including CSE and, of course, another entity which would, of course, be Net1 as well as Tel1. Again, let's have a look and let's listen to the Minister expand on that particular subject. Apologies for that repetition of a clip. Now, as we move forward in line with inflation, ECONET raises data tariffs by 50%. In 2018, data revenues constituted 27% of ECONET's revenues. This concludes our evening news bulletin. Up next is a look at the news in News Review. Please don't go anywhere.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for.
Welcome back, viewers. Thank you for joining us once again. Now, this is time for News Review, and with me on set is, of course, our economist, Tinashe Kaluo. And also joining us from across town is our very own Chief Analyst, Respect Gwenzi. Tinashe, good evening and welcome to the show.
Thank you, Ben. Good evening, viewers.
Splendid. Respect, good evening and welcome to the show.
Thank you, Eben. It's always my pleasure.
Superb. Now, let's get the ball rolling. I'll start with you, Tinashe. Inflation has just come in and we're at a whooping 175% against last month's performance of about 97%. What is your take where these figures that we are just getting as at this point?
You see, where we are coming from, actually to see an inflation of that magnitude, I wasn't, much surprised because if you look at the previous month, what happened in terms of carnage in all markets, which was brought about by those monetary changes and all those currency changes, we have seen total shift in terms of pricing mechanisms where everyone is chasing the much needed US dollar, despite the government actually banning that currency. But if you look at what's happening in the market, to me, I don't think necessarily that it's the individuals and even private players that are driving price upwards, but it's also actually in part the government, which is also after that that much needed foreign currency to finance all those external debts. You look at what's happening, the issues to do with ZESA, the issues to do with Sito Ferrari, the issues to do with all those parastatals. We are seeing an economy which is actually very much in hunger of the much needed of that greenback. So to me, banning that all those foreign currencies and making the domestic currency the sole legal tender here in Zimbabwe, to some extent, is to be blamed for this skyrocketing prices.
Now, over to you, Respect. What is your perspective where these figures are concerned? And do you exactly agree with Tinashe that maybe this was a mistimed engagement to actually eliminate the multi-currency regime?
Of course, much of the impact, what's driving inflation right now is mainly to do with the scrapping of the multi-currency regime. The local exchange rate has grossly been devaluing against the USD, and that is a money supply issue where we are seeing a forex or a foreign currency which is in short supply against a local currency which has been in excess supply over the past few years. So the liberalization and the consequent scrapping of the multi-currency definitely it lifted the lid to what has been Zimbabwe's hidden challenges over the past few years. So the June figure, which is now sitting at 175, is really a representation of the current disintegration or the scrapping of the multi-currency. But I think there's also been an issue to do with retailers trying to price in the risk that is now associated with the local currency. So we have seen a premium that's being placed on our local currency, mainly as a result of what retailers are envisaging to be high risk associated with our own currency. And that's what drove the June figure inflation up to 175.6.
Fantastic. Now to sort of try and project what we can expect going forward, we are looking at month-on-month inflation that's actually came in at 39%. Now you are aware, of course, that the moment that we hit the 50% mark, then we're talking about hyperinflation. Is Zimbabwe heading toward hyperinflation?
Obviously, when you're looking at month-on-month, for the next for July, we might see a reversion back to levels of below 30%. Actually, we only have got July to factor in this whole matrix since the new currency was introduced. So for the specific month of June, we might see month-on-month inflation maybe going beyond 50, but after July, there might be a reversion back to levels of below 50. And since we don't have a consistent month-on-month growth for at least 2 months beyond 50%, it means we won't necessarily be in hyperinflation territory. But I think there are some factors that should come in play. If government obviously introduces what they are trying to roll out as 400 million additional notes to the economy, if those are printed unproductively or not linked to production, and also maybe not in line with deductions from the current RTGS balances, it might also increase, further inflation. And so, going towards an hyperinflationary mark is dependent on how authorities behave in terms of their management of the money supply.
I realize. Now, Tinashe, what is your perspective in terms of where we could end up? I know that you as analysts from Equity Access have projected a figure that is north of 85%. Would you want to take us through that in terms of what we actually see?
If you look at what's happening in the economy, there are actually very much inflationary pressures in the economy emanating from the first one. We had an adverse agriculture season in the 2018-19 farming season. That's why we are seeing some of those shortages of basic commodities, such as your bread, your mealie meal, and some other key commodities. You look at your cooking oil; it's also in short supply. So those things, they build up, to higher inflationary pressures. Then you also look on the other side, the monetary sector as well. The continued depreciation of the local currency also builds up or adds up to already existing inflationary pressures. Then to mention another thing, your shortages of electricity is actually another build up to your price increases. And we have seen that the minister actually has hinted for an increase in the tariffs of electricity. And all those things, if they increase that, it will add up, to your inflation. Such that, for me, I would say that, the fear of us moving towards a hyperinflation, it's actually very real. And sometimes, 2 months, 3 months down the line, we might see ourselves, stuck in that high inflationary era. But in terms of projections, I'm seeing inflation, going, closer to 400% year on year. Towards year on year towards the peak month, which will be your September. Then maybe it will come down, maybe a bit gradual, maybe closing the year around 340%.
340. Okay, interesting. Now, you brought an interesting subject there. The Minister of Energy and Power Development, Advocate Fortune Chassis, also indicating that ZESA would need to reconsider the tariffs, and he says they've put together a board that is looking into that matter, which I think perhaps would be quite of interest in terms of how things develop from here. But key is what the minister indicated, that we have got a situation where ZESA has got a debtors book of about $1.2 billion. Respect, what is your perspective where that is concerned, given the fact that ZESA also owes its creditors a good 300 million? Would you want to shed more light where that is concerned?
Yes, I think my key word with regards to how the ZESA issue is being managed, you don't have to wait for a crisis in order for you to start trying to run after your debt or to look after your debt. I mean, a normal entity which is properly run should definitely not respond to, out of crisis to such issues. So I think that's one of the key issues that I have with how the minister seems to be now responding where there is a crisis. ZESA should have long had a culture of managing its funds properly, like as a going concerned entity, and this has not been the culture. And I'm sure it's also clear across so many parastatals and so many municipalities, which account for the significant share of those outstanding debts owed to ZESA. But if you try to also do the matrix, much of that money is now owed. 1.2 billion, it's definitely in ZW dollars. And when you use the exchange rate, the figure just gets back to somewhat around 200 million thereabout. I think that's huge money. It can cover the cost in terms of international obligations, which are sitting at close to about 80 million owed to both ESCOM and Kabora Basa. So I think it can work, but there are vested interests right there among the individuals. If you try to recall, a lot of houses are now running on prepaid meters, and therefore it's only a few elites, I suspect, who have got those hanging balances. But all the same, I think our crisis is something that is self-inflicted. We should have managed. There's somebody who is paid to watch dam levels. There's somebody who is paid to do some proper meteorological studies to determine the incidence of both cyclone and some other factors that might affect water supply, the drought and whatnot. And there should have been a proper management of the water levels than what we are seeing at the present moment. And likewise, in terms of if you're getting supply from outside the border, then you also have to have proper planning in terms of how you're going to meet the bills and how you're also going to sustainably run your entity as a going concern. So I think the minister is trying, but I don't really subscribe to his idea of trying to mobilize debt in such a shallow way of saying to the public that you have to pay your debts. You know your debtors. You just have to name them, go for them, and just be blunt with your with your solution, other than trying to find solace from the public, which has been in darkness for a long while.
Now over to you, Tinashe. I can see that you can't wait to comment your thoughts.
Respect. First of all, what I do, the point that I don't agree with you is I wouldn't put the blame to ZTDC or ZPC. Where I would channel my blame is the government itself, not the power distributor. My thinking is, if you look at how this debt came into being, it's because of that government is populist policies. You look at that period soon after that, those elections, when the government actually wrote off everyone's debt, but the government didn't actually transfer the equivalent amount to ZESA or to ZTDC. So we are seeing that it's actually an economy where everyone now thinks that the government, after a certain period of time, would come in with a certain populist policies, then all that debt will be written off and something like that. So when you implement a policy like that, you expect actually in the future to see, your individuals and even citizens expecting that. You've built expectations. So everyone knows that if I don't pay to ZESA, the government will write off that debt. That's the culture that we are in. So if you look at the majority of the people who owe ZESA, it's not the civil servants who earns, an equivalent of $100 US dollars. Those people who earn that, they've got prepaid meters and they are up to date in terms of bills. But those are the bigger people in government, the authorities themselves, your parastatals and your big corporates, which are actually government linked. So to me, the problem is not ZESA itself. To put the blame on ZESA, I think we'll be missing the mark there. But also, I've actually looking at dam levels. It's actually a sorry state at Kariba there because right now it's 20%, 26% full. And for it to operate, efficiently, to generate more electricity, it has to be at levels, above 30%. So it's actually a real concern there. But where my worry is, if you look at Kariba Dam, we share electricity between Zambia and Zimbabwe. But is Zambia experiencing the same blackouts as Zim? No. Why? Because Zambia, in terms of imports and in terms of its investments in electricity, has done a bit a lot, not to rely much on Kariba Dam alone. As our problem is, all those decades that we're not investing anything in electricity, then relying on just one, power source, which is your Kariba Dam. Then the other thing that is, of course, the situation, to deepen the increase, the continued, accrual of deaths by both the government and parastatals.
I realize now. You mentioned quite an interesting subject there that has to do with the power. But now my next matter that I'd like us to discuss respect is the Minister of Industry and Commerce, during what he called the State of Industry address, which was actually in the capital this morning. He highlighted that because of concerns such as power, among other issues, there's actually been a downward revision in terms of the manufacturing sector growth from a pre-stated 2.5%, and now we're talking about a 1% figure. What is your comment as well as your assessment where the development of that story is concerned?
Sure. So even I think I definitely agree with the Minister of Industry and Commerce right there. If you really look across the overall sectors, that's the story. There's been a lot of factors at play that are likely to drag the outcome or the GDP outcome at the end of the year. It's not just for the manufacturing sector. It is true for all other sectors, including mining, agriculture, and even some of the service industry. So I think it's quite pleasing to find a minister who comes and says within a certain sectors that I control, we have really revised our projections downwards. Of course, it remains in the positive, but that downgrade is a realization that there are other key fundamental shifts that have happened in the economy over the past few months. And quite notable is the issue to do with power supply. 16 hours of power outage on a day by day basis is quite severe for industry. It definitely means low production. It also means an increase in alternative cost of production, because you now have to source other alternatives for power, including diesel. So that's a huge cost. And then you also look at some of the other factors, inputs. If you look at how Forex has been erratic, it means that producers have to now also be forced to scale down their production. And that reduces a lot of, the output, the expected output from the current year. So it's quite a big story, but I think it just chose to mention just one of the factors that are likely to drive production downwards. But I'm definitely in agreement that there's going to be a decline in terms of national produce, not just sector specific, but right across the broader economy.
Yeah, of course, he did mention issues to do with, of course, this power. He also mentioned the drought. He also did mention how there's been that cyclone, currency issues, the list, of course, being interminable. Tinashe, what is your perspective where this subject is concerned?
I think the minister's figure of 1% respect, I think the minister is actually very optimistic at 1%. For me, the manufacturing sector actually should come down by negative 10% or so. Otherwise, maybe negative 13%.
Is not
maybe negative 13%. Why? You've got 16 hours where your machinery is not running. 16 hours per day. That's lost time in terms of production.
Yes,
then you also look at the issues in the manufacturing sector. Our manufacturing sector works well when the agriculture sector is performing well as well. So if you look at the agriculture sector, maize alone, it recorded a 50%, a more than 50% decline in terms of production. And that agriculture sector, that's the key source for inputs for the manufacturing sector. Then you also look at the production time that's being lost by industries queuing for fuel, queuing for petrol, queuing for diesel. That's a lot. Then you also look at the depressed demand in terms of low income levels, as well as the cost that you incur in terms of if you are in an environment of high inflation. So to me, a 1% is actually very optimistic. I would put the figure at negative 13%.
I realize. Now, in line back to, of course, the subject, which was inflation at the beginning, ECONET coming in to raise data tariffs by a good 50%. What is your comment with that is concerned? I'll throw this one to Respect.
My signal is quite bad. Can you come again?
Okay, I just said we just got news this morning that ECONET had raised its data tariffs by a good 50%. Now, what we're asking is, what is the significance of that way ECONET is concerned, as well as data consumption is concerned across the country in light of the inflation that we're actually seeing playing out?
Yes, so this is a development that was announced a few days ago, and today it came into effect. There's been an increase of at least 50% across the different sets of data packages. But the significance of ECONET services is such that ECONET now has got a huge subscriber base, which is running almost close to 10 million out of a 16 million population. And that 10 million accounts for over 80% of the adult population, which means people who have got access to using mobile phones across the economy. And now, when you're looking at data, the figures for data are also very much up there. Close to 8 million Zimbabweans utilize data services by ECONET. And of course, when such a thing happens, it also means it fits into people's cost structures. It means that users of their services, and not just them, I think it's right across the sector, but for them being a significant player in the sector, it actually means it worsens people's plight, but that's not the real big deal. The real big deal is they're simply responding to macro economic fundamentals which are shifting by the day. Definitely, you can't keep you can't accrue the cost. You can't absorb the cost when you know that all other factors in the economy are shifting, such as the exchange rate, such as your basic cost of doing business. You need to adjust employees' salaries. You also need to procure some other goods and services that are utilized in your services. So they're simply responding to some of these market dynamics, and that increase was obviously going to come. We have seen it elsewhere with liquids, and we have seen it elsewhere, even Net1 and even rivals Telecel as well. So these increases are not something that's out of the blues. It's something that should be expected when there's such a shift in the economy. Of course, the market have got no option but rather to take it, because data remains the only other option outside of normal course that you can possibly preserve data or utilize less of your money. So in terms of affecting their performance, I don't think it's going to have some serious drag on their performance. But spend across the economy is quite constrained at the moment, and every other player is going to feel the pinch. But I don't think it's going to be so drastic for ECONET.
Interesting. Now, Tinashe, we've discussed a plethora of issues tonight. Just as we wrap up this particular segment, what does this mean for Zimbabwe's economy going forward?
If you look at what's happening in the economy over the past couple of months, we are actually in what I earlier termed during our shows that we are officially in a stagflation. That's a rare economic phenomena where you are experiencing high inflation as well as negative growth. So when you are actually in such a situation, some of the policies that you would want to implement as government, they may end up worsening either output growth or maybe worsening inflation. For you to come out of a recession or stagflation, let's say recession, first of all, negative growth of your output, maybe you have to implement your expansionary monetary and fiscal policies. But your inflation is high there. So when you implement them, maybe it will fuel up inflation. So in terms of policy direction that the authorities should take, I think we are actually their hands they are tied up there, and I think they should try to find a way or to find an aggregate that they should target first. They should give more priority towards economic growth, then maybe inflation becomes secondary, or maybe they would push towards having stability, having stable inflation, then they say economic growth has to be secondary. But to me, I think inflation it's economy's number one enemy, and I think authorities should find ways to drive down that inflation. From reports that I was reading today, I think I was a bit infuriated by some comments that the RBZ is actually planning to print some notes and coins to purchase your gold, implying that they are creating forex out of nothing. That development to me, it didn't go well with me. And if it becomes true, I think inflation might actually end the year at levels that we can't even imagine.
Well, let's tighten our seatbelts and hope for the best. Thank you very much, Respect, and thank you so much, Tinashe. Thank you for staying with us. Up next is a look at the stock markets in Markets Daily. Please stay tuned.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Anis Shimbumi, your host. And let's just get into business. Now, the stock market had about 21 counters that exchanged hands today, down from 26 in the previous trading session, which was last week Friday. Now, last week Friday was a week that closed off with the ZESA coming up on a positive trajectory, then actually cutting short a 2-week trend of losses on the stock exchange, some of which has had some cause where investors are reacting in an adverse direction as to how the parallel market has been performing, much to do with some purchasing power parity coming into play there, with investors trying to make sure that they do stack their value up against a depreciating currency. Now, for today's trades, the stock market did continue on a choppy movement there, coming up 0.73% on the all-share index for it to settle at 191.36 points. The top 10 index did add 0.99% for it to settle at 182.74 points. And while the mining index has been stable for the past 6 trading sessions, and the industrials index settled at 638.58 points, which is still 31.10% ahead of its year opening price levels. Now, ECONET has added 4.9% after having increased their tariffs for their data packages almost 50% upwards, also on the back of an inflation figure that came in today of around about 175% thereabout, which is still causing for investors to find some safe haven within the stock market because of how the economic fundamentals seem to still translate a crumbling of the economy. Now, continuing onto what our weekly trend looks like as of today, we are slightly below the last week's level of performance of 191.43 points for the all-share index, which is 0.04% down after it lodged in 191.36 today. Miners index is stable at 0%. Top 10 index is at 0.11% in the negative on a 6-day trend. Now, ZHL was a leader among the counters, among the bulls actually today, adding 20% for it to settle at 4.32 cents, while PPC settled at 219.57 cents after having added about 18.05%. Now, PPC has this peculiar condition, or rather moment that it is in at the current moment. It is a dual-listed counter, and it seemed as if on the ZEC it is pretty much discounted when we compare it to the JSE counter, when we then do translate these two figures into a US dollar term. Now, US dollar term, it would be trading around about 21.9 if we use an implied rate of about 10 according to the old mutual implied rate. And then also on the JSE, it was trading at around about 32 cents as of close of last week. Now, with that gap between these two counters, it would cause for investors to maybe then find some favor in buying some of the stock of that counter. There is evidence within the trades for that counter where it had consecutive 4 sessions running where volumes had been trading around about 200,000 to 500,000 on a daily basis as of last week, and today they did come off a little bit, also translating to the 70% decline in the total volumes traded on the stock exchange. Now, this would cause for most investors, like I did mention, that they would rather buy on the ZESA right now and then hold for that stock to then somewhat come to a parity level as to where the JSC counter is also settled. Now, the ECONET counter 4.9%, we've already touched on that. ZESA 4.51%, adding onto its share value for it to settle at 109.75 cents. Old Mutual settled at 1,572.59 cents after adding 1.57%. Now, Mikos, which is a retail, agriculture and also hospitality concern, did let up 4.35%, being the worst performing counter of 4 laggards today. Sidco coming off 3.09%, while BAT and Sidco International Limited did close off the session with those kind of numbers. Now, for our forex market, the old mutual implied rate is settled at 10.1, while the parallel market is almost at a convergence with the interbank rate, where the RBZ interbank rate is settled at 8.77, while parallel market has had some trades well as worse as 9.3, 9.4 today. Some did improve to about 8.5, 8.6 today. So we had a mid rate of around about 9 today on the parallel market, showing some sort of convergence there between the interbank and the parallel market. Now we as Equity Access have an economic review and outlook paper that we do take a look at every quarter, and for Q2 we are going to be publishing our most and recent research paper on the economic review and outlook, where we have mentioned that inflation is going to peak at around about 393% and maybe then settle down a little bit less than 393% by the time we hit December, at around about 330, 340% thereabout. Yes, we also did project in Q1 that we are going to be pretty much in a stagflation economy, and it is so as we see right now. A lot of prices have been going up, but there hasn't been much production coming up within the market, especially considering that the Minister of Industry and Commerce has also revised his numbers downwards from 2.5 to 1%. Now, do not forget to like, follow, and subscribe our YouTube, Twitter, and Facebook accounts at Equity Access, and do follow our website www.equityaccess.net. Good evening.